Hey everyone, welcome to the Trendline Investor channel. In this video, we're going to look at a 16-year breakout stock which can potentially head higher and could possibly a multi-bagger as well. This is from the power sector, and along with this, I'm going to discuss two F&O stocks, another stock from the infra space, and another stock which was recently listed a year ago. So these are the five stocks I'm going to discuss today, and I'm also going to tell you how these stocks were picked and certain parameters which you should be looking if you're going to trade or invest in a stock. So do stay tuned till the end of this video. It's going to be interesting both for you and for me as well. So let's get started. So first, the stocks that we're going to discuss today is from the scanner. Now, from the last week video, I started telling from which scanners some of the stocks are coming. So this week, this is the CCI bullish scanner, CCI weekly crossing 100, which means these are entering long-term uptrend. So from here, I have two stocks which I'm going to discuss today. But before we get into that, first let's discuss the Nifty Outlook, because Nifty has done a lot. Global markets have done a lot on the back of Credit Suisse story, on the back of SVB story. We've seen some crazy fall, but the charts are looking very interesting at this point. So remember last week I told that if we don't hold on to that point, we might see a fall, and I think we saw. A lot of stocks still are doing pretty good, right? There have been some stocks which have fallen, but last week, I think Thursday, Friday, some stocks are showing strength and many stocks are setting up further, right? So for now, Nifty is still in a long-term uptrend. Now, if you see the pivots, you can use the pivot high and pivot low indicator, and you can plot it and you can see these numbers over here. And if you plot these numbers, you can see that the Nifty was in a downtrend, but then now we are in an uptrend, right? Now, this uptrend is not broken until we break below these levels over here. And until this green zone that I marked is not broken, the long-term uptrend is still intact and the trend is still up in Nifty. If we close below the zone, that's when I feel Nifty has entered a downtrend again after almost 9 months or so. And also, if you look, I've plotted the relative strength comparison and the CCI. Now, CCI has entered a bearish territory, given that Nifty is already trading near the previous swing zone. Now that's when CCI turns bearish, and CCI is bearish, but finally the signal is ultimately when we break this low. Okay, so for now, there is still some cautiousness. You need to stay aware of the market situation and take positions accordingly. But still, the best part is we formed a long wick around the zones. So at least a short-term bounce is in place. I'm not sure whether we'll still enter long-term uptrend again. But for now, the short-term trend is down and the long-term trend is up. So hopefully once we make a higher high, the short-term trend also will start moving higher, and overall we might see a much bullish market going forward. So this rate of strength here I plotted is against the Dow Jones, and it shows that Nifty is outperforming the US markets since we started the bull run. Nifty has been outperforming the US markets. It's just a matter of time before we start heading higher. Okay, now moving into the daily charts, if you see, I just wanted to show this channel over here. So Nifty is right now at the confluence of support. So the green zone that I've marked here is where Nifty is right now. And now also we are near the parallel channel support, which means this is a very good area where Nifty might go some sideways. So we might see some bounce around the zone and eventually we'll hit higher. Now remember, we need still a higher high. We might go down like this and then go higher as well. It's a possibility, right? So that's the outlook on the daily chart. So overall, short term, we have probably made a bottom, but there's still every chance that Nifty can go down. So keep your eyes open and keep watching the charts for what market settling is. Okay. So having said that, let's now get into the stocks for the day. The first two stocks I'm going to discuss is two F&O stocks, two futures and options. So if you are interested, do take these trades with a stop loss strictly, because if you're trading F&O, it's literally a time bomb. So do not trade without stop loss. So let's discuss first Bharat Petroleum. Now, Bharat Petroleum is one of the most underperforming stocks. If you look at the RSI over here, RS not RSI, relative strength over here, the stock has literally been underperforming the overall market since a long time. And finally, for the first time in almost 2.5 years, relative strength is looking good, and the stock is looking to head higher from here. Also, CCI has turned bullish already. So we've seen some signs over here already. And this week's volume has been really good. This volume is almost, if you see this bar over here, we've not had such kind of volumes almost in the last 1 year or so. So that volume looks good. The candle looks very good. And once we break this major resistance zone over here and we get out of this base, then we are starting a long-term uptrend again here in the stock, right? So for that reason, BPCL is a very good stock, especially if you're a conservative trader or conservative investor. These kind of stocks don't really move very fast. They take their own sweet time, but they also don't fall much in a day or two. They are not small cap, mid cap stocks. So what you can do is you can keep a stop loss of around 314. Buy the stock at current market price. The stop loss is just 10.5%, and you can look for targets of 540, which is almost 50% up, not 50% up from the current levels that we're trading at. So that is going to be those zones over there. So you're going to look for around 540, which is the previous all-time high. I expect this to probably come in the next year or so. Probably might take some time longer, given that it's a large cap stock. So keep riding the trend for maximum gains. That's the first stock. The second stock I want to discuss today is Kotak Bank. Kotak Bank also has not done much since that breakout we had in just post the COVID run, right? And we have been going sideways, and this is, some people might say this is inverted head and shoulders, but I'm not getting into all those details. For now, the stock is taking support around this major zone. Now, this is around the 1620, 1640 levels. And look at the wick again we have formed this month with some massive volumes. Now, usually when you see such kind of massive volumes at a support zone, which means this stock is around this major support zone and there is every chance that we might head higher again. Okay, so that's the second stock today that I'm discussing. So you can buy the stock at current market price, which is around 1690 levels. Keep a stop loss of just 4%. Now, this is a very, very good risk reward, especially if investing. Then you can just probably put a decent 5% or 10% of capital also. Keep a 4% stop loss. You lose hardly 0.4% of your capital. So if you had 1 lakh, you'll probably lose not more than 400 rupees or so, right? So I'm going to buy the stock and looking for targets of 1950, which is the recent highs over here, that zone over there, and that's 3.5 times the risk that we're taking. So buy at current market price, stop loss of 1620, and targets of 1950, which is around 15%. If you're investing, do right. If we break these levels, then we can go much higher level. We can go much higher towards even levels of 2500 or so in the next couple of years. Okay, so that's the second stock. The third stock today is a very, very interesting stock, which is Kalpataru. I'm going to cover also the fundamentals because I feel this stock could be a core portfolio stock, just like many other stocks like we discussed in the last year or so, right? So some stocks have done really well. So this stock also I feel can do really well going forward. And for that reason, I'm going to discuss also the fundamentals just to give you a perspective as to what this company is doing financially, right? So since 2000 level, if you see, we've gone up from 4,000 crores to almost 15,000 crores. That's almost a 3.5 to 4x jump in the overall revenue. And if you look at the operating margins, so we've gone up all the way from 8%, 9% to 12%. Now I feel we are back to 9% again, but this probably could be a 2013, 14 scenario, and probably again we eventually head higher even in terms of operating margins, right? And then we have net profit, which is we hit almost all-time high of around 600 crores in 2021, but then we're kind of lagging now, but I feel we should still catch up and head higher. And so that's the fundamental, or that's the perspective from a P&L perspective, right? So moving on to the shareholding pattern, which is very interesting today. So here, promoters have reduced their stake, but who has been buying the stake is DIS. So DIS stake has gone up from 27% to almost 8%. And if you look at public is holding just 8%. So the overall, the number of shares that is available for the public is really less. And DIs have been buying, whereas FIs have slightly reduced, and also promoters have reduced as well. Okay, so overall, I think the fundamentals probably might be known by the DIs or big institutions, and I think we can head higher probably. Now, taking a look at the technicals, I have a quarterly chart here. Now, this is a 16-year resistance. Now, this is a slanting, upward sloping resistance, and we've had this major move up. Then again, we had a minor move up, and probably we might form a smaller one more. I am not really sure. If that forms, then it's going to be really a fast move up. Now, but if you don't follow that, if you don't form another kind of a VCP pattern here, then I think we might break out here and eventually head higher. Now, the point to note here is this resistance is a very, very major resistance. And if you break out, I've done a lot of videos, IceMake, BDL, HAL, Godfrey Phillips, a lot of these stocks have broken out from multi-year resistances. And if the stock also breaks out, then we might head higher. Look at those volumes over here. Since the COVID lows, there's been some massive buying in the stock. And I think the stock can do well going forward. So also in spite of the weaker market overall, this stock has not gone down at all in the last 6 months or so, right? This is a quarterly chart. Just taking a look at the weekly chart over here. If you look at the zone over here, we have not gone down as such, right? The markets have gone down, but this stock has just been going higher. After this massive move up, we had a strong consolidation. Again, we're going higher, right? So if you look at the relative strength here, you can see how strong that is. And CCI also is bullish. So overall, this is a very strong bet, at least from my perspective, for a core portfolio. It has strong fundamentals and also has good technicals. And remember, the stock has not done anything for 16 years. 16 years, literally, investors have hardly got any returns. So I think the stock can give very good returns going forward in the next few years. So you can buy the stock at current market price, which is 570, stop loss of 480, which is 15%. But we're going to look for targets of 75,000 rupees or 75%, and which brings us to almost 5 times the risk that we're taking. Okay, so that's the most important stock I want to discuss today from a fundamental plus a technical perspective. Now, do let me know in the comments whether you're going to buy the stock, and if you think it's not a good bet, do let me know also why, because I'm also learning just like you. I'm just sharing what I know. I hope also I can learn from you as well. So we have 2 more stocks, but before that, if you do like my video and if you did like my analysis, don't forget to hit the subscribe button and don't forget to like this video. So last 2 stocks, one is Medplus, which is listed somewhere in 2021. Now, Medplus is a health services company. So I'm not getting into the fundamentals here, but just discussing technicals. The stock was listed somewhere in 2021 December, and we've been having this strong downtrend. Again, look at the pivot points over there, right? We've going lower and lower, and now we've crossed this pivot. Now we're going higher. Now, once the price crosses the previous pivot point, is that the point you need to really consider a stock, because that's when probably trend is changing and the stock might eventually head higher. Now look at the CCI. CCI is looking very bullish. Also, relative strength has finally moved up above the 52-week moving average, and overall the stock looks excellent. I think here we've had a nice base as well. Another volatility contraction pattern could have been really good. Another move down and then a breakout would have been even better. But for now, this weekly candle looks excellent, and I think we might head higher. So you can buy the stock at current market price 770, stop loss of 630. Stop loss is pretty deep, around 18%. Now, don't just go ahead and put all the money that you wanted to buy the stock. You can wait for a short consolidation and then add. And if you find a better setup in terms of stop loss, wait for that setup and then go around full into that stock. Okay, so you can keep stop loss of 18% for now. Looking for targets of 1200, which is listing high, which is around that zone over there. I think we should easily go towards that zone in the next year or so. Okay, so that's the third stock. The final stock for today is an infra stock, which is GMR Infra. Now, I did post about GMR Infra somewhere in September 2022. I think somewhere around here is when I posted, and the stock literally gave a very good 50% move. But now we've had this massive consolidation here, and I think we are going to break out of the zone. Again, this is also a stock which has been looking very good in spite of the weak market. It just went sideways, and we again, CCI also is looking bullish here. And this week we had good volumes. So overall, this setup is looking excellent. And it's also a futures stock. You can take a futures bet as well if you want to. So you can buy the stock at current market price. If you're taking futures bet, your stop loss shouldn't be so much. So you need to calculate your stop loss probably on an hourly basis, or wait for a consolidation, wait for a dip, and then buy probably. But you can keep a stop loss of a stop loss of 36.5, which is around 14%. And we're looking for targets of 65, which is around 50% returns from here. So these are the 4 stocks I wanted to cover today. And yeah, that's it for now. I hope I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye-bye.